Now we'll talk about bank rate. Okay, so as I told you, bank rate, marginal standing facility, repo rate and reverse repo rate, they work together. So what we are going to do in next half an hour, that we'll see the features of these and then we'll see the application part. Clear? So when we talk about bank rate, so number one, first you have to know that bank rate is the rate at which commercial banks take loan from the RBI. Okay, so you can say bank rate is the rate at which commercial banks take loan from RBI. Okay, number one. And whatever loan they are taking, that loan is taken for long term. So when I am saying long term, it means that is more than 1 year. More than 1 year. Number three, whenever they are taking loan through bank rate, or you can say whenever commercial banks are taking loan from RBI, so they don't need to keep any mortgage. Okay, so there is no need to keep any mortgage. Clear? Number four, here you can say minimum cost of lending rate, minimum cost of lending rate will be more than bank rate. Okay, so minimum cost of lending rate will be more than bank rate. So ultimately, whenever you go to a bank, okay, whenever you go to the bank for taking loan from any bank, so you will see that banks will offer you some lending rate. Okay, that will be more than bank rate. Okay, that will be more than bank rate. Okay, so ultimately it depends on the bank. So ultimately, if suppose bank rate is, for example, if suppose bank rate is 6%, okay, 6%, your lending rate will be more than 6%. Okay, your lending rate will be more than 6%. So if you bargain with the bank, please give me loan at less than 6%, bank will not give you. Okay, bank will not give you. Why? Because it's a guideline of RBI that your loan rate or lending rate must be more than bank rate. Okay, so ultimately this is the thing. Okay, so this is what you can say. At least you can say your lending rate, your minimum lending rate will be more than bank rate, and it depends on the bank that they want to give you loan at any rate. Okay, but not less than 6%. Okay, so you can say minimum, for example, 6.1%. Maximum depends on the bank, they can give you at 15%, 16%, whatever. Okay, but they will not less than this rate. Okay, next, bank rate is also called as penalty rate. So can you even tell me why we call it penalty rate? Although I will give you the logic when we will do the application part. Bank rate is also called as, or also known as, penalty rate. So can anyone tell me why? Okay, can anyone tell me why? Can anyone tell me why? Can you tell me why? Okay, so only one student has replied, Karan. Okay, don't worry, very good. Okay, but I'll tell you the logic also. So these are the meaning and features of bank rate. Okay, these are the meaning and features of bank rate. So you have to remember this thing, because in prelims they can ask you anything. Okay, meaning and features. Okay, now we'll talk about repo rate and reverse repo rate. Repo rate and reverse repo rate. Repo rate and reverse repo rate. So first of all, remember that these together are known as policy rate. These together are known as policy rate, number one. Number two, when we say repo rate, so what is repo rate? Okay, or you can say repo rate and reverse repo rate together known as ready forward contracts. Okay, repo rate and reverse repo rate together known as ready forward contracts. They are together known as ready forward contracts. Okay, so they are together known as ready forward contracts. Clear? Okay, ready forward contracts. So this is the first thing that you have to remember. Number 3. So first we'll talk about repo rate. Now repo rate is the rate. So why we call it ready forward contracts? I'll give you the logic for that also. Repo rate is the rate at which commercial banks can take loan from the RBI. Okay, and that is for short term. Okay, so repo rate is the rate at which commercial bank can take loan from RBI. Okay, loan from RBI, and whenever they are taking loan, so that loan will be taken for short term. Short term means less than 1 year. Less than 1 year. So you can say it is similar to bank rate. Okay, so in bank rate, loan is taken for more than 1 year. Okay, but here the loan is taken by the commercial bank for less than 1 year. Okay, now another thing that you have to remember for exam is that here you have to give mortgage. Here you have to give mortgage, which is also called as collateral. So in Hindi we call it something you have to pledge. Okay, like गिरवी रखना. तो कल हमने देखा था कि अगर हम पब्लिक डेट के अंदर भी हमने बात करी थी, अगर गवर्नमेंट ऑफ इंडिया अगर बोरिंग लेती है, ओके, चाहे कंट्री के अंदर से चाहे बाहर से, तो उनको कंसोलिडेटेड फंड ऑफ इंडिया प्लेज करना पड़ता है, मींस गिरवी रखना पड़ता है. क्लियर? सो यहाँ पर भी यही चीज है, मॉर्गेज ऑब्लिक कोलैटरल यू हैव टू कीप. बट हियर like in public debt we have seen consolidated fund of India becomes a mortgage. Okay, so here you can say only RBI approved securities can be kept as a mortgage. Okay, RBI approved securities can be kept as a mortgage. So remember this, only RBI approved securities can be kept as a mortgage. Clear? I hope it is clear to you. Okay, is it clear till here? So RBI approved security. See, I am focusing only on prelims pointers जहां पर आपके questions आ सकते हैं और जहां पर आपको stuck कर सकता है UPSC. Clear? Clear? So only RBI approved securities can be kept as a mortgage. And remember here that when you are keeping RBI approved securities, it means like we have talked about in SLR. That some securities, so in SLR you can purchase securities also, that is using SLR amount you can purchase securities, but remember here that you will not use these securities which you have to maintain in SLR. Okay, so ultimately in this RBI approved securities you cannot use securities kept in SLR. You cannot use securities kept in SLR. Clear? So remember this thing that you cannot use these securities. Okay, so RBI approved securities can be used. Okay, can be keep as a collateral or mortgage, but you cannot use SLR securities kept in SLR. But if you have any other securities apart from SLR, okay, means what you have to maintain in SLR, if you have additional securities that you can use, okay, but not these securities which you have to maintain mandatorily, you have to maintain in SLR. Okay, so this is what you have to remember with respect to repo rate. Okay, repo rate. Now if we talk about reverse repo rate, so normally most of the students say this thing that in reverse repo rate the loan is taken by the RBI from the commercial banks. Okay, so that is reverse repo rate, but this is wrong because RBI does not need any loan. Okay, so RBI itself is a creator of money, so why he needs loan? Okay, why RBI needs loan? So RBI does not need loan. Okay, so ultimately here reverse repo rate means whenever any banks or any commercial banks, whenever any commercial bank has excess deposits, so they can submit, okay, they can submit that excess deposit to RBI, and RBI will offer some rate. That rate is reserve rate, okay, and RBI will offer some rate. That rate is known as reverse repo rate, not reserve, reverse repo rate. Clear? So ultimately reverse repo rate is that commercial banks put their excess deposit with RBI. Okay, so here the word is excess deposit. So you cannot say, if suppose in statement answer is if language is written like this, ki RBI takes loan from the commercial bank, okay, under reverse repo rate, that statement is wrong. Okay, so loan word cannot be used. So again I am saying this loan word cannot be used. Clear? So it is excess deposit. So this is what first you have to remember. Okay. Now in this also you have to remember this thing, that in this also that bank can keep their excess deposit with RBI, and that is only for short term. That is only for short term. Okay, that is less than 1 year. Less than 1 year, and whenever they keep their excess deposit with RBI, so RBI will give them RBI approved securities. Okay, so whenever they keep excess deposit with RBI, so RBI will give them RBI approved securities. Okay, RBI approved securities. So this is what repo rate and reverse repo rate. Clear? So again if I summarize for you, so we can say that in repo rate, banks take loan from RBI. Okay, banks take loan. Loan means money is moving from, when I am saying take loan from RBI, it means RBI will give them some money. Okay, RBI will give them some money, and whenever RBI is giving them money, so it is mandatory for them that for that money they have to give RBI approved securities. RBI approved securities. Clear? And these are not the part of SLR. These securities are not part of or not from SLR. Okay, not from SLR. So you can say, when I am saying not from SLR, but whatever you have maintained in SLR, that you cannot use as RBI approved securities. Okay. Now when we talk about reverse repo rate, so you can understand in this way that in repo rate, money is coming from RBI to the banks. Okay, whereas banks are giving RBI approved securities. Okay, whereas in reverse repo rate, whatever excess deposits, okay, so you can see the arrow sign. So here the arrow sign is like this. Here RBI approved securities are going to this. So you can say, if suppose I am bank, you are RBI. So in repo rate you are giving me money. So money is coming from you to me, and I am giving you RBI approved securities. But in reverse repo rate, excess deposit that I have, I am giving to you. So ultimately excess deposit. So it means we can say the direction of money is from bank to RBI. Okay, and when this is the thing, RBI will give RBI approved securities to the banks. Okay, and this whole process in this is for, you can say, short term. So this is what again I have summarized for you. Okay, now remember here one thing, that whatever you are doing is for short term, and it is obligation on you. Okay, it is obligation on you that you will come after some time and take back your securities. So ultimately in this, if bank has taken a loan using repo rate, okay, and they have given collateral, that is RBI approved securities. So ultimately it is mandatory obligation on the part of banks that they will go to the RBI and take back their securities or purchase back their securities again. So they cannot say this to the RBI that I don't have money, you sell my securities and recover the amount. No, they cannot say like this. Okay, so ultimately it is mandatory. Now if you have understood this thing, same in reverse repo rate. Now if you have understood this thing, that is why it is called ready forward contracts. Ready forward contract means this thing only. So you can say you understand this mobile phone is securities or RBI approved securities, and I need, for example, 30,000. So I'll give you my mobile phone worth rupees 30,000 to you. Okay, worth rupees 30,000 to you, and you will give me 30,000. Okay, suppose I need it for 1 month. So I'll come after 1 month, I'll give you 32,000 and take back my mobile. So it is mandatory, obligation. Okay, so that is why if you see the full form of repo also, so repo stands for, RE stands for repurchase. Okay, REP stands for re, P stands for purchase, O stands for obligation. Repurchase obligation. So there is an obligation. Okay, so this is what you have to remember. This is what you have to remember, that whatever transactions you are doing, that is taking money and giving RBI approved securities, that you have to again do it after some time for whatever time period. So it is an obligation. Okay, so I hope understand what basically I am telling you. So it is obligation that you will do it or do it again. Okay, again means कि कुछ time के बाद पैसा आप वापस दोगे और अपनी securities वापस लोगे. Clear? So ultimately कुछ time के बाद you will return the money and they will return your securities. So arrow उल्टा हो गया, arrow opposite हो गया. Same here, money will be come back and securities will again go back to the RBI. Clear? So this is what it will be. You can say opposite, arrow get opposite. Okay. So ultimately it is obligation. Now why these obligations are there, we'll talk about that also in application part. Number 1. Number 2. Now whenever we say collateral, okay, so collateral is RBI approved security. So it means if I want 10,000 rupees as a borrowing, so I have to give RBI approved securities worth rupees 10,000, means it must be of same value. अब ये ना हो कि 10,000 के लिए I am giving you 5,000 rupees securities. Okay, so ultimately collateral must, the value of collateral must match the value of loan. Okay, so you can remember this thing also, the value of collateral must match the value of loan amount, or you can say excess deposit, whatever. Okay, so it means if suppose I am bank, I have excess deposit and I am giving money to you. I am giving money to you. For example, if suppose I have 1 crore, so as a RBI, you will give me RBI approved security worth rupees 1 crore. Clear? Okay. Any doubt till here you can ask me. Now one student has asked, but sir, as a repo rate is a short term rate, why RBI wants collateral as bank rate, which is a long term rate, does not require, it should be opposite. Okay. Now one student has given a very good thought. I'll talk about, just give me a few minutes, I'll clear your doubt. Okay. Is RBI bound to accept excess fund from the commercial bank? Okay. Okay. Yes, it is bound. Okay. So we'll talk about that also. Just give me just few minutes. We'll come to the application part. One, let me complete MSF first. Okay. So till here it is clear. No doubt, whatever doubts are there. So just I am covering meaning and feature. Just give me a few minutes. Let me complete MSF first. Then we'll talk about application part. Okay. So 2 doubts are there. Definitely I'll answer it. I will not shy away to answer these things. I will definitely answer your every doubt in class also, as well as after class also, if you can send me there also. But point is this, you study. Important is that you study. Okay, any doubt till here?